Into entrepreneurs, we are looking at a lot of co-lending opportunities.
India is not just one India, but there are several Indias in it, right?
So you can pick any segment of users and there's 100 million of them available for you to target.
Top 10 listed companies in India today, 3 of them are financial services.
It's not like people are not creditworthy, it's just that you don't know that they are creditworthy.
There are just 40 million people who have credit cards.
$530 billion of credit gap that's there. You can't throw money at the problem and say I'm just going to get big fast.
I think banks are very keen to do co-lending.
Collections, there is an intent issue and an ability issue.
So banks lend out to NBFCs, NBFCs in turn may lend out to Fintechs, and Fintechs eventually reach the customer.
We don't have audacious enough founders.
Hello and welcome to Prime Venture Partners podcast. I'm your host Shivani Kulkarni, and today I have with me our partner Sanjay Swamy, and we are going to talk about all things lending. Welcome Sanjay to the podcast. And how should we start?
Well, it's great to be welcomed back to our own podcast. But on a serious note, maybe I'll start with a question for you, Shivani. And it's been a couple of years now for you here at Prime. And of course, you've been an investor in Flipkart and earlier worked at Avendus as well. So you've seen this industry a lot. As they say, certainly in fintech and particularly in lending, a lot of people ask, is lending the only business model? Are all businesses really just lending businesses? And so just curious, as you've been spending a lot of time with founders now of late as well, and looking at policy, looking at opportunities around co-lending and whatnot, what are your views on where are some of the opportunities in the space and, maybe just paint a little landscape of the space itself?
Sure. Happy to. So maybe let me take a step back before I get into fintech itself, right? And let me just talk about financial services in India, because that, of course, is the backbone. Large opportunity. If you just see the top 10 listed companies in India today, 3 of them are financial services, or rather banks. So HDFC, ICICI, SBI, together, I think top 3, I think in the top 5, these are 3 of them. And growing, right? Like most of them grow at 30-40% year on year. So you can just see how large the underlying opportunity is. And yet, when you just maybe dig deeper, you will see that there is still so much under penetration. I'll just throw some numbers. I'll try to give some context as well. But SME credit, 500 billion plus of credit gap. Like this is how much you can actually lend to the SMEs, but they are not getting access to that credit. If you talk from a consumer perspective, there are just 40 million people who have credit cards. Maybe there are people like you and me who might have like 5-6 credit cards. Okay, आपके पास नहीं है, मेरे पास 3-4 है. But yeah, we have access to a lot of these things, right? But if you take the 1.4 billion today that we have in India, only 40 million have access to credit cards. Similarly, personal loans and other products also only scratch the top surface. So I think there's tremendous opportunity here to build, right? And I think fintechs over the last 10-15 years have captured some amount of it. I would say they are also still scratching the surface. There's lots to do. But if you just take from a numbers perspective again, India is the 3rd largest fintech ecosystem today in the world, after US and China, of course. And there are close to 10,000 startups. Now you asked, like, is credit the business model or not? So of these, 2,500 are pure play lending startups. And rest everybody, I think, while lending may not be the primary monetization model, but they do find their ways and come to lending, but 2,500 are pure play lending. Now maybe I can also get into the various aspects or various business models before we get into specific questions on this podcast, right? In lending itself, I think 2 broad categories in which people are building today. One is on the consumer lending side. So again, people like you and me, or people, general consumers, right? That kind of credit products you can use to service this segment. So that forms one broad category. And the second broad category is on the SME side, that's on the business side. Now, both these categories you can service through secured and unsecured lending products. Secured, just for our viewers to throw some light, it's whenever a bank gives you a loan against an asset, or you use something like maybe your property or an asset as a collateral, that's when it's called secured lending.
Or a vehicle, for example.
Vehicle, for example, like auto does. So that is one form which is secured lending, and then there is unsecured, where the customer, based on the data, is itself getting underwritten. So yeah, I mean, so that, because you asked me the landscape, right? These are the broad two categories, and I think today we see startups building across these segments. So there are opportunities in each of these. Maybe as we go deeper, we can explore some of this.
Yeah, I was just going to say that, when you were rattling off those numbers around 40 million credit cards and so on, I've been a fintech entrepreneur and later, worked on Aadhaar and then worked on India Stack and the works. And then, of course, been more of a VC over the last decade or so. Those numbers just don't seem to have changed. Although we know, we ourselves have got probably 15, 20 companies in our portfolio who are doing phenomenally well. And of course, there has been a lot of penetration of at least digital financial services, UPI, of course, being pervasive. From a demand gap perspective, it really doesn't seem like, we've moved the needle that much. And it's also a reflection of the fact that there is a lot more need for credit and a lot more opportunity to deploy credit. But I think if you're an entrepreneur looking at this space, I would say there's never going to be a winner takes all in this particular space. And opportunity, I wouldn't say there are too many opportunities that have been spoken for entirely. And there will always be opportunities even now for companies to come in.
One aspect that I wanted to touch upon, right? And when you talk about needle moving things, I think this has been a key enabler for this particular ecosystem, and you have worked on the digital public infrastructure yourself, right? So would love to understand from your perspective, what is the impact that some of these things like Aadhaar, UPI, what is it that you have seen, what has been your experience on the impact that they have had on not only financial services, but the larger ecosystem as well? Maybe we can start there.
Yeah, look, I was a fintech entrepreneur before all this existed, right? And part of the reason struggle to be a successful entrepreneur was, amongst other things, it was impossible to open a bank account. It took 3-4 weeks from filling an application form to getting it approved, not to mention it was a process that was fraught with the use of paper and probably a lot of mistakes as well, right? And therefore very expensive. Fast forward to 5 years later, and that was part of the motivation to sort of be a player in a part of the Aadhaar team. India suddenly had, the foundations and of course has built on it quite a bit, which is something that most people around the world would be envious of. And I think our entrepreneurs don't really realize in some ways, because, most of the youngsters today have grown up in the post-Aadhaar world, don't really realize the luxury that we have of this incredible digital public infrastructure, starting with Aadhaar to do, authentication as well as electronic KYC, e-sign for documents, which is accepted, in the court of law. DigiLocker as a framework for storage of documents, retrieval of authentic documents, so to speak. Of course, we'll talk in more detail later about account aggregator, the consent framework, all of which are really very important topics in themselves. And India, we've got state of the art and probably thought leadership in this space, and using these as the foundational blocks. If you layer on top of it, whether it's an UDAM ID for small businesses, whether it is GST for understanding their business flows or the cash flows, and last but not least, on a monster scale, UPI, which makes movement of money extremely straightforward, right? So all of these infrastructure elements did not exist 12 years ago, right? And today they're here. We can't think of life without them. Just to give you some context, KYC, I talked about paper. One study that I had done at the time was, the telcos were at the time doing about 1.5, 1.6 million KYCs a day, which translates to about 20 per second in a work day, right? So by the time you snap your fingers, 20 people in India got a new SIM connection. But also in the process, they sadly cut down about 1,000 trees a day doing that, because a tree gives you about 80,000 sheets of paper. If you do the math, it's pretty scary, actually. There's a million trees in 3 years that were being destroyed just doing telecom KYC, right? So today, not only do we have a better and more accurate solution, right? It's also ultra low cost, and it has helped bring a lot of people into the financial system and be able to serve them. Just one other quick anecdote, for mutual funds, for example, the commission used to be 0.5%, but the cost of KYC was 1,500 rupees, which meant that unless you invest 3 lakh rupees, the commission is not paid off, right? Now, 4 million households in India can afford to invest 3 lakh rupees a year. But now with Aadhaar and with eKYC, all of a sudden, the cost of KYC is zero. Suddenly a 10,000 rupee mutual fund investment is a very viable product, right? So the sort of sachetization that we saw the HULs doing with shampoos and things like that is really the biggest opportunity facing financial services. And I don't think we have tapped that yet. We're still sort of just trying to take the existing opportunities and make them more digital and try to make them more accessible. But, picture abhi baki hai. I think there's a lot to be done.
Yeah. I think even on the payment side, right? Like just UPI being there, and with UPI auto pay and few of these innovations. I mean, if you think of just the lending flow itself, disbursement and collections is so much more easier today. I mean, customer in a rural area may not have or may not know net banking, cannot operate it. But with UPI and just the amazing job that PhonePays, Google Pays of the world have done with the user interfaces, it's so easy to just set up an auto pay and just get the customer to pay on time. One aspect that you talked about the KYC aspect, but the second aspect that comes when actually in the lending product specifically is underwriting and the availability of data easily. And I think account aggregator today is doing, at least has started to show some cost cutting there in terms of efficiencies there, because account aggregator, if you think about it, what it does is it connects all the banks, mutual fund houses, your PF accounts, your LIC policies, and the data can be fetched if you are an FIU or FIP, and there are nuances there, right? But all this data can be fetched very easily. And think about it, if you go to, suppose, say tomorrow, any of the fintech and want to apply for a loan, the fintech can easily fetch all these details with your consent, and underwriting becomes that much more easier. So I think it's, like you said, it's just the beginning, right? I think KYC was solved. Now payments is solved with UPI. And I think this will also solve, to a certain extent, underwriting or data issues as well.
Yeah, so I think, if anything, that part has been a little underwhelming in terms of progress. However, I think from a startup perspective, it's important to see that, if you just have access to the same data that everybody else has got, to me, that doesn't feel like a competitive advantage, right? So I feel startups have to try and figure out some proprietary moats. It's either access to proprietary data that, when coupled with all the other data that exists, will help them underwrite better. It's perhaps better distribution that will allow them to access customers at a lower cost, access customers with not just a lower cost, but also with some proprietary information about them. And I think that's what startups should strive to do, right? If everybody is going to try to do the same thing, that at some point the banks will win, because they do have the muscle and the, if there is nothing proprietary about a startup, then, and that's actually where I think we struggle a lot when we look at companies, probably getting a little ahead of ourselves, is what are the proprietary moats that companies have built that, layered on top of the open interoperable rails that are there, will give them an opportunity to grow really, really fast. And that's what I would like entrepreneurs to think about.
Maybe just building on that, right? Like when a founder, maybe say a 25, 30-year-old starts, he may not have access to proprietary data or distribution, right? So how do you think an entrepreneur in this segment should think about creating some of these moats? Because clearly entrepreneurs
the simple answer
today
is wait till they're 50 years old and somebody would have created the moats. So that's the wrong answer, I guess, of course.
No, but how do you start thinking about, like, you start somewhere, right? How do you...
I think, first of all, yes, we have 1.4 billion people, but startups need to figure out how are they going to get to the first customer, the first, if you're talking consumers, the first 100,000 customers, the first maybe 1 million customers, right? And turn them into borrowers for a particular product. And if you start thinking in along those lines, then you can start thinking of what they call, riches and niches, right? There are huge profit pools solving one problem for a very small subsegment of the larger population. And because you do that, actually very few people are trying to solve the same problem, and you're likely to win a disproportionate piece of that market, right? And when that happens, that becomes the foundation for how you subsequently can become a larger company, right? And by then expanding perhaps to adjacencies and so on, right? So I kind of cringe when founders come and say, well, who's your customer? Well, everybody can be my customer, right? That's the wrong answer. It's true in all businesses, nothing to do with fintech, right? So segmentation becomes very important. And when you're focused on a very homogeneous segment, then you'll start finding a lot of sources for proprietary data, or you'll find a lot of commonality about that segment where you can go and build some patterns around them, because you're targeting them in a very laser focused manner. So that, I think, is going to be important. Now the same thing, the other thing that goes with that is even your go to market becomes very interesting, because you don't have to be doing $1 million IPL ads and sponsoring all the teams, because your customers are very well understood by you. You know where they are, you know who they are, literally, and how to reach them. So I think these are things that startups have to do. None of this is specific to lending or to fintech, but the moment you can segment, and if you have a good sizable segment that is very homogeneous, a lot of these opportunities will arise.
Got it. And also there are different types, like I think Kishore Biani says this often, right? Like India is not just one India, but there are several India's, Bharats in it, right? Like there are the top 10 million, then there are like say maybe 200, 300 million, and then there is the rest of India. So most of the fintechs, at least in the last 3-4 years that I have come across, most of them tend to target the top 10 million. And as a result, I think some stats I can share, right? Like consumer credit has been, like this has been a customer, the top 10 million, that has been overlent. You will see in terms of the DPDs that they have, the number of loans that they carry. This has been a segment that has credit cards, personal loans, and 10 other type of loans. So what would be your advice to founders then, given that this segment is very attractive, they earn a lot, have the spending capability? Should you go after that, or do you then target the lower segments, but then distribution and a few other things might become slightly more tricky? So what would, I mean, obviously it's not one size fit all, but if anything that you can suggest? Or
Yeah, I think, as we have discussed several times here, Shivani, the opportunity of that is being created through this digital public infrastructure that we've got is really to be able to reach, and that the fact that we have now 700-800 million Indians with smartphones, some huge number like that, all of whom have Aadhaar, all of whom can be technically KYC'd and issued a loan instantaneously from any part of the country or to any part of the country. That's actually what has created the opportunity, right? So you can pick any segment of users, and there's 100 million of them available for you to target. Right now, every segment of users has got good people there, and the thing in India is you actually have a problem of a thin file, right? Because there isn't information. It's not like people are not credit worthy, it's just that you don't know that they are credit worthy, and now you need to find other proxies, right? So yes, it's easy to lend to the upper 10 million, but frankly that segment is not just over lent to, they're also fed up, right? So they're not even looking for new products, and the number of spam calls that we all get, offering us car loans when we don't even have cars. These are things that I think this segment is done with right now. There will be an occasional innovator that will come out and do something cute and thing, but if you are a startup starting out, I think there's no novelty in doing that. I always tell founders, it's great to not succeed. I hate to use the word failure, but if you're not successful attempting to solve something that nobody has ever done, that's forgivable. But imagine failing at something that 5 people have shown you the right way to succeed at, right? So I think pick a problem that is meaningful, where the outcomes are going to have, a very strong upside, and build moats around it, right? It's not meant to be easy being an entrepreneur and solving these problems. But if you solve the right problems for customers for whom you're the first one solving them, they will be loyal to you. They're going to be, and you can move up the chain very quickly. They will talk about your product to other peers of theirs who they know probably better than you. Then I think there are tremendous opportunities here. And I think if you look at some of our portfolio companies, they've all done that, right? Whether it is Auto looking at leasing of two-wheelers, which is a huge segment, but the leasing product never existed, or whether it's Finac going to small retailers and, getting them, working capital or cash flow lending based on their business track record. Companies like, Navdan or Metafin, which is doing solar rooftop financing for MSMEs, moving them directly from diesel to electric. They're solving real problems for those customers, and the financial services are kind of incidental to the business problem that they're solving for the user.
Yep. And I think most of these apply to non-fintech companies or non-lending companies as well, right? But when you specifically come to lending companies, there might be certain things like collections, maybe supply of capital. So any advice that you have for founders about how do they go about these things, like collections ho gaya ya fir?
Yeah. So first of all, when you're dealing with money, particularly other people's money, you're in a regulated space, right? Now there may be the law allows for fintechs to probably do 5% as FLDG and partner with an NBFC or a bank and things like that. But make no mistake, you're in the business of managing money, and from a governance and compliance perspective, this company is no different from if you were regulated, right? I think that has to be the mindset. And as we've talked many times, we always say there's no concept of a gray area in this business, right? So conveniently interpreting the fact that the regulator was silent about something to say, okay, they didn't say we cannot do it, is a wrong way to go about building a business, right? We have to look at it and say, okay, if they have not said that you can do it, it's probably not allowed, right? And so if you take the approach of, in a scale of black, white, and gray in between, the only thing that you can do in a financial services or fintech play is it explicitly white. Otherwise, there's no gray area, it's just black, right? If you have that discipline, then it's harder, but it's actually easier because there's no guesswork here, right? So you clearly know what is allowed, what is not allowed, and you stick within the rails. As you mentioned right at the beginning, $530 billion of credit gap that's there. One doesn't have to do a lot of magic to become a big company here. One has to just be consistent, diligent, and not try to grow faster. You can't throw money at the problem and say, I'm just going to get big fast. You have to actually put in the hard yards and, build up. You have to see the cycles. You have to see like Auto, for example, it's a 3-year leasing product. You can't say that this thing is working until you've seen a few customers complete the 3 years, right? So you can't just blindly scale it in the first 2 years saying, oh yeah, this model is going to work. So things like that will make for a well thought out business. Founders have to be patient, whether in your 20s or in your 50s, and you need to follow the rules, right? Now the regulator, for all the cynicism that the startup ecosystem sometimes throws at them, this regulator is actually very forward thinking. Of course, they're first and foremost there to protect the economy. They have to make sure that things don't fall off the rails. Secondly, they'll protect the customer because it's their money that we're talking about and safeguarding. But outside of that, pretty much the primary goal that the regulator has in mind is inclusive growth, right? Can we bring more people in a structured manner into the formal economy? During the India Stack launch days, we used to have this character called Rajini, who was a lady making pakodas who would borrow 900 rupees at the start of the day and return 1,000 rupees at the end of the day. And along the way, probably make like 200 rupees of profit, right? That's an outrageous, 3,600% of interest that she was paying, but she didn't realize it. But with Aadhaar and eKYC and eSign and DigiLocker and UPI, for the entire part of the disbursement, for payment collection from customers and for repayment, now all of a sudden in a completely digital world, this person could be eligible for, maybe not 8%, but certainly a 15 to 18% rate of interest loan, and in the formal economy. And you can imagine what an impact that would have to such a person, right? So that's the big opportunity and the dream that we've all been working towards. And I think we're still only getting started here.
Yep. And I think just on the regulatory aspect, right, I think they have been, like, while they have encouraged innovation, I mean, there have been so many sandboxes, so many new concepts coming from the regulator itself, right? They are also very vigilant. Because just like I was talking about the consumer credit example, right, like the recent regulations on increasing the risk weights, I think is directed towards the right end. Like the end goal that they have in mind is more stable.
Can you elaborate a bit on that? I think it's also an area that a lot of you've done some work researching it, but it'd be great for you to talk about that.
Yeah. So, I mean, just to give some numbers there again, right? I think retail credit, especially personal loan and credit cards, have the overall outstanding amount, if you see balance outstanding, that has grown 30-40% year on year over the last 2-3 years. Now, what this has resulted into is, again, like the top 40-50 million customers have access to it. But if you think about their earning potential and how much they can repay per month, right, their repayments have sometimes exceeded the earning potential. And RBI has constantly seen this. Like, you can see that, okay, this customer has overdue, like, it reflects on your credit score, right? It comes in your credit report. So if the customer has an overdue and somebody else is going and giving this customer another loan, then that's not a good sign. It's obviously not a sign of a stable economy. So that's where I think they started noticing some of these signs last year in September, October, and in November they took the decision to increase risk weights. What that essentially means is that banks, typically sources of capital today in India are banks. So banks lend out to NBFCs, NBFCs in turn may lend out to fintechs, and fintechs eventually reach the customer, right? Unless the fintech itself is an NBFC. So in this particular chain, given that banks are at the top, what they said was that, okay, if you're lending out 100 rupees to an NBFC, you need to have certain reserves to protect against any scenarios which can cause instability, right? So you need to, the amount that you need to have as a reserve is going to increase by 25%. So if you were to save 10 rupees, you're going to now save 12.5 rupees. So that is why the interest rates will then go up, because on this 12.5, the bank is not earning anything, right? So that's how they try to control the overall scenario. And it's a very nuanced way of doing it, like slowly sucking out liquidity from the market, instead of doing it overnight or not allowing certain type of models. So I think they
but
have
it's the responsible thing to do, is what?
Correct. Exactly. It's a responsible thing to do. It's a very responsible thing to do. And over time, obviously, things will cool down, and, these customers who have been overlent, they'll also come to a certain equilibrium, and then you can again start the growth.
Very good. So one area you and I have been working on, and maybe it'd be good for you to sort of explain to the audience, is this whole space of co-lending. Right? I mean, we have both Knight Fintech in our portfolio, which is sort of at the infrastructure level, enabling this for banks and NBFCs. And then, of course, we have both Navdan and Metafin that are NBFCs in our portfolio that are leveraging co-lending. As a huge trend moving forward, be good for you to, since you've researched this at a more fundamental level, structurally, what has changed and why is it so significant?
Got it. So yeah, I think into
entrepreneurs, we are looking at a lot of co-lending options.
Yeah, we are. So in case you're building, you know where to come. So yeah, just elaborating on that, right? So there is this common misconception that NBFCs get valued on their books, right? And they have only a certain amount of capital that they can have access to. So if you have raised 100 crores in equity, you can probably raise, say, 200 crores in debt and lend out a total of 300 crores, right? I mean, I'm just doing some quick, simple math here. But when you use co-lending, this entire constraint gets opened up. Like you can actually lend a lot more and build a lot bigger books. You can service a lot more customer segments without taking necessarily the risk on your own books. So here the way it works is that you have banks at the back end who become your partners in this. And co-lending is essentially a risk sharing model. So you take 20% of the risk, and the bank takes 80% of the risk. So in this way, if you put in say $100, the bank will put in $400. And overall, you can create a pool of 500 and lend to the customer. So this is how it, like even the classic FLDG models, right? Like earlier, before the again regulation came in, people used to have 10%, 20% in FLDG, and like we used to be okay with it, given that this is some sort of skin in the game for the startup, and then obviously banks and NBFCs at the back end come lend. This is no different than a classic FLDG model, and here again you are putting in 20% and the banks are putting in 80%, right? So you can actually go out and build a large scalable company without essentially raising too much equity. So that's how co-lending works, and that is the mechanism, right? Now this segment for which this is
the big nuanced difference, of course, is FLDG is sort of a default guarantee, whereas in co-lending you are putting up 20% of the money as a part of the loan and the bank is putting in 80%. Whereas in the past it used to be you have to raise that money as equity capital and put up the entire 100%, right? So suddenly for an NBFC, you're saying they don't have to raise a lot of equity for them to be able to serve the customer. Now, obviously, they'll be getting lesser ROCE on the 80%, but they'll be getting their full ROCE on the 20%.
Correct. But then ROCE actually will be higher, because then it is actually ROE will be higher, because return on equity, your equity base is remaining the same, but you're making some money on the 80% that the bank is lending, because you are taking care of, say, distribution, collections. So you're providing a service to the bank, right? And obviously there is a tech layer which somebody like a Knight Fintech today is doing. So yeah, and one more thing here, I think if in the priority sector, right, like that's the SME women entrepreneurs, I think banks are very keen to do co-lending, because for them as well, they want to enable this particular segment and they necessarily don't have the distribution reach all the time, right? And some of the fintechs can specifically, like you said, like take a niche and solve something for them. So the fintechs can actually solve for this segment and the banks will be more than happy to partner. So I think it's a very, very attractive area for somebody to build.
Wonderful. No, because I think historically we used to always wonder about whether NBFCs were venture fundable, but suddenly with the co-lending model, especially if you can leverage 1:3 or 1:5 at some point, all of a sudden it becomes a very attractive value proposition. And the other nice thing about it is you're now a first-class citizen with a regulator. You are yourself regulated, and so there's no sort of overhang of will the guillotine come down someday, and chop off my business, right? What are some of the we talked a little bit about India Stack. I was looking at some numbers. I think it is extraordinary to think about. I was there when the first Aadhaar was distributed and the first authentication was done, and obviously we were the first UPI transaction was done, and it felt like, oh my gosh, this thing is actually working, and the excitement of almost being like an entrepreneur and seeing some of this stuff. But today we are talking about hundreds of millions of authentications being done every day, literally on Aadhaar. Billions of 10-12 billion UPI transactions a month going on. India's leapfrogged. I remember as a founder of one of the first mobile payments companies, well before Paytm actually, it felt like we are so far behind China. We used to read about Alipay and VPay and all these things going on, and all of a sudden we've leapfrogged everyone, right? So as the younger crowd, who sort of grew up in this environment, right, and really you probably don't have too many memories of a pre-Aadhaar or pre-digital India world, how do the younger population look at some of these things here? And when you travel overseas, and visit and see the crazy use of cash over there compared to India, right? What does it mean for Indians to look at this infrastructure we've got? And any comments on that, both I get at an emotional level as well as a practical level?
Yeah, I'll tell you one thing that I'm always very happy about. So I have these friends, and so I did my engineering from PESET Bangalore, right? And so we were there from 2012. Back then, UPI was not that prevalent till even.
UPI was 2016.
Correct. So then we graduated in 2016. So most of these guys just went off to US, and now they visit every year in summers or sometime when they come. And we are at a restaurant, and the bill comes, and I just open my app. I pay using UPI, and they have to then. Like while going back home, they have to literally count cash ki auto wale ko dena hai kyunki UPI unka nahi chalta, which by the way we are solving currently. I think there is so guys, next time you come to India, there is a solution for you. But
by the way, if you're building a solution, we are looking to fund also,
yeah, and
as an entrepreneur here.
No,
or if you guys want to come back to India and solve the problem, talk to Shivani.
Yeah, but I mean, I'm just very happy to see ki when I probably just use UPI and it's so seamless, and these guys say, oh wow, we don't have anything like this in the place that we stay. I think it's just a proud moment, and it's just ubiquitous, right? Like everywhere, right? From a panwala to the biggest high-end restaurant, everybody has it and everybody's using it. So yeah, I think just pride, and hopefully, given that now we are taking UPI global, which I think you can share a bit more about, hopefully we'll be able to go out and also pay with these instruments.
Yeah, absolutely. I think in the first phase, it's sort of UPI for Indians being accepted and interconnected with, systems like nets and, in the UAE and in France and things like that. But I think what would be really powerful is if other countries adopt UPI, right? Just as they adopted the card system from Visa and MasterCard and so on. If UPI itself becomes the backbone, and that might hopefully create a lot of opportunity for the Indian technology companies, for the companies that have actually built on top of these rails to be able to just take it and port it into other parts of the world. So, I remember when, guess I'm young enough to remember when Maruti first came into India, long before most of you were born. And, at that time, the Japanese brought everything. They brought their paint company, they brought their tire company, they brought their, speedometer company, brought the whole works, right? That was the whole Kiretsu model. And I'm looking forward to seeing how the Digital India Kiretsu, gets exported and, into other parts of the world and creates more than just sort of diplomatic opportunities for us, and actually creates business opportunities as well. But talking about opportunities, right? Let's talk a little bit about some of the segments that you're excited about, where you see opportunities. And if your entrepreneurs listening to the show, what are the areas that are still sort of largely untapped?
One space that I have been very excited about, and I haven't necessarily seen too many companies though, is the whole secured lending space itself, but the infrastructure and of course distribution layer of it, which is the lending against property and lending against security. Lending against any asset, right? Now, think about it. Today, there are so many people who have demat accounts, who have mutual fund accounts. The deposits in India are actually going down because there's so much money that's flowing into the mutual fund industry, the equity markets. So, how do you tap into that to actually increase the number of people you can lend to improve inclusion? So, I think what is required is just the rails to first understand and get the information about what are the assets that the person owns, and also create awareness, education about this particular product. So if a customer today is thin file or a new to credit customer, right, he may not get loans at, or at least unsecured loans at lower rates. But instead, if he says that, okay, I am new to credit, but I have been investing in stocks or mutual funds for the last 3 years, and I have this corpus, and I can pledge that, right, at least for the first credit card or the first loan, then the rates that he'll get will also be less. This will help build his file, and I think in general is much better for the customer as well, right? So just creating those rails and enabling distribution, I think, is a big opportunity.
Actually, in the US, it's called a home equity line of credit, right? For if you're borrowing against houses, and that's a huge business. And so it's I mean, we've seen a few startups here and there trying to solve this problem, but I think, yeah, it's still largely an unsolved problem, I think, is a thing. What else?
No, I think the same extending to exactly, right? Like LAP, which is loan against property. I think land records are getting digitized now. So that will, and like several states, right? Andhra, Karnataka are at the forefront, Tamil Nadu. So once, and this process is going to happen all over the country. So what are the opportunities that come up? It's largely how do you, like once the property is online, it's digital. Once the records are digital, you can easily pledge it, the banks can verify it, value it, and it unlocks an whole other cash flow, right? For SMEs specifically, I think this is huge. So somebody who's again creating that infrastructure, definitely yes. Another trend which I briefly touched upon, and this is not really related to lending directly, but is related to the fixed income market, which is in the bond side. So one thing that banks are very concerned about is that they are not getting deposits. Again, because the money is flowing elsewhere. But people are investing in bonds. People are investing in corporate bonds. They are investing in even some of the startup bonds, right? Like Oxizo and a few others. How do you democratize this? Like, how do you, again, educate people and get distribution for this? You may have to partner with the brokers. You may have to partner with others. But somebody who can build in this layer, I think over the next 10 years, it's a big opportunities because banks will want to work with you. Either you get them deposits or you just work and get like bond issuances can be done, right? Like bond NCDs, etc. can be issued. So how do you democratize this is another big opportunity that I think I'm very excited about.
Cool. But those are still opportunities that are like the top of the pyramid focused, right? For the most part. Before you actually see the ability to come down, but they are, I guess, untapped opportunities for sure.
Now, on the LAP and last side, though, it is not just the top 10 million, right? Because they anyways have the access. I think it will lead to a lot more people in the
But
middle.
what I'm saying is, if you're a homeowner right now, then
Yeah.
you're in a fairly that where you can borrow against your home. It's a small.
Correct.
It is definitely the top 100 million, right? May not be the top 10 million. You're right there.
But I think there is one more. I think you have a lot of affinity.
So I'm
towards
very
this one.
passionate about a different segment,
Correct.
which I think has got to be brought into the system. And every time I look at MyGate, which is a company that we backed a while back, they were in 20 gated communities at the time. They're now in 25,000 gated communities. So seeing like 1000x growth is like phenomenal. But the first, amongst those 20 gated communities, one of the things the founder had shown us on the day when we first met them was the digitization of the attendance records of everybody that worked in the community, right? And whether, in Mumbai, I was told later that there is a segment called the ABCD segment, which is Aya, Buy, Cook, Driver. And I've been longing to leverage this data to try to build credit to this segment. And just not met anybody that really does a great job of it. There are a few companies. Almost everyone seems to insist that the right thing to do is to go open market. And there the cost of credit and lack of proprietary data becomes a challenge. Whereas here we have an opportunity with probably about 7-8 million domestic people on the platform, probably at least a couple of million active on a daily basis, who for whom we have very high quality attendance information. And attendance is just a proxy for creditworthiness in many ways, because attendance means that you're working, which means you're going to get paid. Broadly, by zip code or pin code, you probably know what the median salaries are in the segment. And there is actually probably an employer who's willing to even vouch for this person, or probably even is a money lender already to the segment, right? So I think this is one spectacular opportunity that we would love to see any entrepreneurs reach out to us for. But this is just one example. There's the whole manufacturing segment. People are working in that segment. There's the logistics segment where there are millions of people that drive around that just don't get access to fair credit. And that can be transformative of lives. It's one of these few situations where I feel you can make money by doing good and improving people's lives and livelihoods. So this alignment of the heart and the brain, as I call it, so these are some opportunities that I think that are still completely untapped and waiting to be grabbed.
Yeah, I agree. And I think just building on the logistics part, the manufacturing part, right? I think each of these verticals you can just go deeper, like
Yeah,
just taking healthcare as an example, right? If you get into a hospital, you can start catering to the vendors, to the pharma supply chain there. I think in building intelligence or proprietary data when you're serving a vertical itself becomes a
correct.
moat.
And this is where I was just going to say that we talked about proprietary data and modes. This is exactly what that comes. And now if you bring on top of it the whole AI layer that's coming about, right? This is yet another huge glutton for data. The compute power is getting really extraordinary now. And I think the combination, we now have sort of this perfect storm situation, right, where the government rails or the public infrastructure rails of identity and KYC and things like that are very robust, very mature. Moving money around is essentially free, and it is programmable money in that sense. And now, as we see these streams of data coming in, the compute power that's there to do the analysis of the data, and the whole generative AI segment, where we are going to move from this industry history of being one size fits all, right? You have a bank account, I have a bank account, the UX is going to look exactly the same. It doesn't matter what you do with your bank account or what I do with mine, to a one size fits one, which is like ultra personalization. There is no need for all of us to have 5th of the month as our repayment date. If I get paid on the 7th of the month, maybe the 8th of the month should be my repayment date, right? This flexibility in the infrastructure that's there, the personalization and hyper personalization, I think is going to create massive opportunities here. And I think that's the really exciting part of where we are going to reap the benefits of the last 10, 15 years and sort of help leapfrog.
No, I think one interesting thing that, like, as you were saying that, I was just reflecting. Uh, I think India, at least in the fintech, and I think you have, like, we have discussed this once. India in the fintech space specifically is looked at the as a premier place, right? Like where people know how to build, people have built like large scalable businesses, infrastructures. So I think with AI coming in, there is a lot of opportunity to export. And sorry, this is not at the lending level, but this is at an infrastructure, software level thing that we can do, right? Build for verticals which are large, not only in India, but globally. And you'll be able to sell software elsewhere, like you'll be able to give solutions elsewhere. So I think this is again an opportunity specifically in fintech infra that founders can definitely explore.
Yeah, absolutely. I think another related area, I know we didn't talk much about collections, which I personally am a little cynical about, because I feel with all of the access to digital payments and the freedom to move money around, um, collections, there is an intent issue and an ability issue, right? If you don't have the ability to repay, then you're not going to repay, even if even if you intended to, right? And intent, to me, I think once people are educated enough to realize that paying on time is to their benefit, not paying on time is to their detriment from a future borrowing perspective, right? Right now, we might be in this transitory phase where people are touching credit for the first time and thinking, oh, I can run away with it, right? But once they realize that they have more to gain by actually being good citizens and repaying, then I think this collections problem goes away. Because then the only people who won't be repaying are either people who are forgetful or people who don't have the ability to repay, right? So that is my view on it. I could be completely wrong, and I know there are large companies being built as we speak. But the other one that is interesting here is sort of this new age of completely personalized, conversational, doing things on WhatsApp and things like that, right? And really sort of tailoring the experiences as well. What are some things you have seen in this space?
So I think two, three examples, right? Like one is obviously just the customer experience side. Like how can you give hyper personalized experience to the customer? Whatever they ask, what they're saying and give the responses appropriate to that. But the second thing, which is I'm personally very excited about, is on the RPA side, that is process automation side. Uh, collections as an example. In insurance, it is again claims processing as an example. It requires a lot of just probably reading an email, reading an SMS, and filling up some data in some software, right? And these are processes that take like 7-8 days. Like if you ever have claimed insurance, you know that it takes time because the guy will ask you to send 10 documents on email. Then some of it will be PDF, some of it will be just screenshots, and then he has to go sit and enter.
Print it out in triplicate.
Yeah. So then, I mean, with AI coming in, I think this entire process itself can get digitized. Like it can read emails, it can just extract whatever information it requires from the image, fill out the thing. The entire workflow can be obviously automated. So lot of efficiencies come in, right? And the second thing that
efficiencies with compliance, actually. So
Yeah,
even it'll make the
efficiencies
job
with
of the
compliance.
regulator and
a lot easier.
the ability for a provider to be compliant and
Yeah.
the ability for a regulator to verify that they are indeed compliant, right? That
Correct. Compliance is a big part of it, right? And the second one, I think, even on the underwriting side, right? Like while people have tons of data, but the models, etc., get fine tuned over years. But here, I think with now ChatGPT, and you can create your own models on top of it. All you have to be careful a bit about is data privacy and just security.
Sure.
But apart from that,
these
I
are all
think
solved problems, but yeah, one has to be
Correct.
vigilant about
Just
them.
be vigilant about it, but the potential is immense. So I think underwriting, process automation, and obviously customer experience, these three are at least my picks.
Awesome. So let me ask you one last question, an out of syllabus question. If we are going to sit here in 3-5 years and say, man, we all completely missed the opportunity. It was such a great opportunity and it just never happened, right? What would have happened between now and then?
Wow.
I told you it was an out of syllabus question. I don't know the answer. That's why I happily asked the question. Should we take to a commercial break?
Yeah, we should do a commercial break here. Can you repeat the question?
No, I'm just saying, look, this is such an obvious, monstrous opportunity here, right? And yet, it might not happen over the next 5 years. We may just, solve 1% of this opportunity or 5% of this opportunity, right? Which will be a shame, right? And so I was just sort of brainstorming here. I didn't have an answer myself, so I thought I'll just ask you. To me, I think it will be if we don't have audacious enough founders, right? I think people solving incremental and not thinking about the opportunities that we have here, and not being stuck in the snapshot of saying, okay, ChatGPT 4 does this and let me build on top of this, right? Because those infrastructure platforms are going to grow by leaps and bounds. So, we've just seen what has happened in the last 12 months or 15 months, right? Can you imagine how it's going to look 5 years from now, right? And people, I think if people are, we've seen many times in this industry, people tend to think incremental, but I think we have an opportunity to think revolutionary. And I think that's my first thought of where, even if you're not aiming and cannot visualize something, then you will never achieve it, right? So that was what was coming to my mind. But I'm sure you have some thoughts as well. It would be great to hear.
Yeah, I think for me, right, I think one key lever, like if you see the adoption curves, right, like obviously there are smartphones, there is internet to a certain extent, and payments, maybe say media, all of it is slightly lagging behind. I think if we can, if that curve doesn't follow the entire smartphone adoption, digital adoption, a lot of the assumptions that we are making today in terms of cost to serve, like data that we can have on these customers to underwrite. Because for me, if you are to truly succeed in the next 5 years, it needs to be with like say 200, 300 million people having like complete access to credit, at least at the bare minimum. And for that to happen, I think it's just the penetration, just the adoption has to keep up with that pace. And there were months or years where we saw, given the economy and the place we are in, it's growing brilliantly. But I think if it just continues the growth, it will happen. But yeah, I think for me, that is the variable that is most important.
I think related to that too, it feels like if the incumbents don't adopt the technology at the pace that the startups are attempting to do, because the startups will still be a very small piece. 1 in 25, 1 in 50 might actually succeed to get to a large scale, right? But really, it's about how the incumbents also leverage this new infrastructure and technology stacks that are coming out, right? I'm just before this meeting, actually, I had to go and some, re-KYC had to be done for one of our corporate bank accounts. And all of us, 4 people, signatories, had to do like 26 signatures each on paper, right? And I was cringing, saying, okay, why can't all of this just be one electronic signature and with one electronic document? I was just going back to counting the trees. In fact, I told our admin, let's make one donation today for one tree, because we just cut that tree today doing signatures. So I think it just does bother me that the incumbents have, in theory, accepted and enabled, but they've really not adopted wholeheartedly. And I think that will be a risk in this ecosystem. So hopefully the next 5 years will be quite different in that from the past 5 years.
Yeah, I think we have seen adoption, right? Like with Night Fintech itself, there are, at least on the lending side,
a lot of the public sector banks,
correct, public
interestingly,
sector banks
have been
yeah.
thought leaders here.
So hopefully
Great.
that trend continues. Great. Thanks, Sanjay. Thank you so much. It was wonderful chatting with you. And again, thanking you for being on your own podcast.
And hey, entrepreneurs, reach out to us. We love to chat with you. And looking for people who are continuously looking to solve these monster opportunities that we've got in India. So reach out to us, and all the best. Cheers.
Dear listeners, thank you for listening to this episode of the podcast. Subscribe now on your favorite podcast app for free, and you'll be the first one to know when new episodes are available. Just search for Prime Venture Partners Podcast in Apple Podcast, Spotify, Castbox, or however you get your podcasts. Then hit subscribe. And if you have enjoyed the show, we would be really grateful if you leave us a review on Apple Podcast. To read the full transcript, find the link in the show notes.